My name is Kevin Cadet. I'm the Executive Director of Black Angels Miami. Really excited for the talk today. I don't think an hour is going to be long enough, and I'm sure there's going to be lots of questions. So I'm going to try and make sure there are enough minutes at the end for questions. So if you have questions, please put it in the Q&A, and let's get going. So thank you for joining Black Angels Talk. I'm Kevin Cadet, again, the Executive Director of Black Angels Miami. And we're joined today by Dami. And I don't think I've ever said your last name out loud. I've always said Dami.
And then practice.
Do you want me to practice now?
Come on, we're in the diversity of
like, move the pressure to Kevin. All right, Osunsanya.
Osunsanya.
Sanya, that's close.
Almost there.
Almost there. And Dami is the head of value creation.
Yep. At
SoftBank's Opportunity Fund. And she's going to be talking with us for the next hour. So before we introduce Dami, just quickly, Black Angels Miami, we're an angel investment group based in Miami, but nationally in far as scope is for our members. We have members coast to coast, and in the opportunities or the founders we look to put in front of our members for possible investments. And our genesis was to increase the numbers of Black people in angel investing, so really be an on-ramp into the space. I guess similar as far as the genesis and far as mission for Opportunity Fund. But I'm not going to talk to that. I'm going to let Dami introduce herself.
Yeah, so thank you so much for having me. Thank you, and Baron, for inviting me here. So I'm Dami Osunsanya. I'll do a brief intro, and then Kevin, you can kind of jump into questions and navigate as you see fit. Dami Osunsanya, I co-head the Opportunity Fund. It's a $100 million fund at SoftBank that focuses on investments for Black, Latinx, and Native American founders in the US. We're about almost 2 years old. We're a year and a half, or year and 3/4 old. So June 2020, at the onset of George Floyd's murder, we launched. Famously, within 24 hours, we got $100 million of capital from SoftBank. We're over 75% deployed, 75 portfolio companies. 50% of them have already raised multiple rounds. And recently, I'm in Miami because we have now moved our headquarters of the Opportunity Fund here. So really excited about that. I'm also Miami native. So I appreciate the warm welcome from everyone on the Black Angels Miami group for my very first week here, and I'm glad we got to do this.
That's amazing. And we're so happy to have you. So I knew that more than 50% of the capital was deployed, but I'm really impressed that 75% has been deployed.
Yeah, we actually have some good news next week, so.
Oh,
more is coming.
This right now, next week. So we have to wait till next week for it?
We have to wait, yeah. My comms, our head of comms is on, and she's gonna make you wait. She told me already.
Okay, so when you have the second fund. All right, so give us a little bit, before we dive into the Opportunity Fund. You're a Miami native, so born, raised in Miami, and then tell us how so it sounds like you left, but you're back. So what happened, not the whole life, but how did you get intervention, SoftBank and the Opportunity Fund, and make your way back to us? Yeah,
so grew up in Broward, Broward County, but spent a lot of time in Miami. My mom's actually a social worker to this day out of Opa-locka in downtown Miami. And my dad had a small business in Opa-locka. My very first internship was at the NAACP of Opa-locka. So Miami is home through and through. I went to churches there. And essentially did pre-law magnet for middle and high school. As a good Nigerian immigrant, I wanted to be either a lawyer or a doctor, and I hated blood, so I picked the lawyer route. Went to William Dandy in Florida High. Was really blessed. I was a Silver Knight honoree, so I got a good scholarship there. And then knew that I wanted to leave Florida. I just had to leave my parents and really explore. Funny enough, and this is why it's just always interesting to hear people's stories. I remember my guidance counselor specifically told me not to apply to like Harvard or Stanford or so, because you know, she's like, I'm not sure if you will like really get in, and I want to like, so the only school I really applied to out of state was Emory, and my other backup, which was not quite a backup, but was University of Florida. I was set to go there because my parents didn't have enough to send me to Emory. And then literally the last week, I got a really great financial aid scholarship from Emory, and then like my dreams came true, and I set sail there. At Emory, I pivoted from law and studied finance and Chinese studies. So actually lived in China, studied Mandarin, was a celebrity because there are no Black people in China. So I took autographs while in Shanghai and Beijing, and then came back and finished at Wazetta Business School, and did a typical corporate finance route. So I worked at Sprint, I worked at Kraft Heinz, I led an operations center at a fulfillment center at a company called McMaster-Carr. I ran 100 people and managed 100 people, many of which were working there before I was born, and then went to business school at University of Chicago. And from there, I decided to pivot more towards tech. My dad's an engineer, my husband's an engineer. It felt like there was this momentum on, what the future would look like. So I landed at Intel, where I led the corporate finance team with the CEO and basically owned revenue through EPS on the P&L. So $75 billion P&L, was prepping us for earnings, talking to analysts, also talking to the board about the future of Intel. And then a recruiter pinged me about this mysterious place called SoftBank. They were launching this $100 billion fund, more money than I even knew how to wrap my head around, trying to disrupt all these industries, all in technology. And it felt that if I wanted to make a big impact, it was better to be kind of an inch deep and a mile wide in a bunch of different industries than to be really, really deep in semiconductor, which I was at Intel. So I made the leap, and it's been amazing. I'm now 3 years in, and I've started a few different initiatives. Like one is I launched our first ERG for Black and Hispanic employees called Blend. Then I launched our first partnership with an organization called Afrotech to start getting SoftBank thinking about diversity. They were so impressed with all the founders that came to our event. I was able to then launch an accelerator called Emerge, and really invest capital for the first time. So it was our first early stage vehicle dedicated to diverse founders. I've invested into 14 companies through there. The program then went global. And then George Floyd was murdered a few months later, and the other side of SoftBank launched the Opportunity Fund with Marcelo Clare, who is Miami native and very inspired by this ecosystem. And I got pulled in to co-lead the fund. So the rest is history.
That's amazing. You've covered so much there, and you did it despite a guidance counselor trying to be a roadblock before you even started. And
I remember her name. I'm going back. I'm going to go back and visit her.
Yeah, and I'm scared to how many people have had that feedback early on in their careers and actually listened. Like, you didn't listen. Yeah. I got it. I didn't listen, and then I wouldn't get in. I got into all the schools, but
nice. Well, I listened. I didn't apply.
You didn't apply.
I did not apply to Harvard or anything.
Emory was the only one. But you did apply to Emory. I mean,
yes,
you did apply, right?
I knew I had to escape.
Right, and maybe the motivation was to escape, but whatever the motivation was, you applied to a great school out of state, and not that there ain't great schools in state, but the rest of your story is amazing. So
thank you.
We're so happy to have you in Miami. So tell us a little bit more about your role and the companies that you've invested in so quickly over the last 2 years.
Yeah, so it's been really great seeing SoftBank on this journey, and like I said, more to come next week, because I mean, 2 years ago, we basically had one Black founder out of, 100 companies, right?
Really?
And now we're at 100 roughly between Emerge and the Opportunity Fund. SoftBank has really dedicated, capital to over 100 diverse-led companies. So it's been amazing to see the journey. We're hoping to see other large funds mirror that.
So
But
quick
what we,
question, quick
oh, go ahead.
question, because it's burning a hole in my head. So you had one Black-led company before, and
Yeah.
then you have 100. So I'm sure it wasn't because, well, you tell me, what changed? Because there must have been
Mhm.
Black-led companies applying before.
Good point. So SoftBank is a growth, the core of the thesis of the Vision Fund is growth investing, so growth stage investing, Series D plus. So when SoftBank launched, I mean, I'm sure you guys remember the headlines, the checks into Uber and WeWork and DoorDash, those were $5, $8, $10 billion checks. There just weren't a lot of companies that could take check sizes that high. So it took a lot for us to realize, in order for us to really make an impact to this population, we had to go early to increase that pipeline, right? So what we're seeing in the Opportunity Fund is, companies that we invested in a year and a half ago, they're now raising not only a round after that, but they're raising their second round. Like literally, we're trying to get into a round from one of our companies that we invested in, I guess, 2 years ago, or like when we launched the fund, and now they're about to raise a second for the third time, with us. So increasing that pipeline and starting off at seed, Series A, was really our methodology to ensure that, we're making sure that companies can get to Series C, Series D, and that the Vision Fund will now start looking at them, which has been an amazing thing to see. So now the Vision Fund is coming back and saying, hey, can you give us an intro to this really cool company in your portfolio? It's doing amazing. We really want to engage. So it's great to see that come full circle.
That's great. That's amazing. So with 75% deployed, with that 25% left, are you still looking for new founders?
Yeah, absolutely. That's the core of what we're doing. So we spend about, and we don't have a formal kind of allocation towards follow-ons, but I'd say probably 80% of the companies we followed on. So we're pretty committed to our founders, and our check sizes range. So in this fund, we do early and growth. So that means we do seed A. We don't do pre-seed or pre-revenue. We're just not comfortable, given most of us come from like this, the Ubers and the WeWorks of the world. So it's harder to kind of make impact when we're so too early. So we do Series A and seed. And then on the growth side, we do Series B, C plus, et cetera. So we partner with the Vision Fund, or we do it ourselves and lead and invest in those rounds.
Okay. So your follow-on really, I mean, correct me if I'm wrong, but it sounds like since you can go to the other funds, you're not limited. So you don't need that allocation between follow-on and.
I want this one.
Sandra. Hi. Yes. You see, Sandra.
Yeah.
I'm in a meeting. I can't do it now.
Hey, just do it. It's a level 1.
See, this is COVID isn't over.
My daughter can do it too, so don't worry.
Look.
You would die.
Look, you will die if you don't move. Go now. Yeah, you will know, Sandra.
Do it. No.
Sandra.
No.
Oh,
No.
Sandra.
He's like, you will die.
He's gonna die later. You absolutely. And when mommy comes and finds you, just go, Xander.
No. I'm not leaving without you do this.
Too cute.
I'll never get
Oh,
that.
cute is not, Goodbye. Do not come back. Close the door quietly.
That is entrepreneurial, Chris.
That's my personal startup, and I have 2 others.
Love it.
I completely forgot what I was saying before being rudely interrupted. But yeah. So your follow-ons, you have major pockets for follow-ons. So that's good. So tell us about seed, Series A, growth, particular sectors. What are you looking for?
So essentially, our thesis is really straightforward. We want to prove that there's no trade-off between excellence and diversity. So we're looking for Black, Latinx, Native American founders in the US that are building tech-enabled, scalable companies. So venture-backable companies. So we have everything from AR, VR to fintech to crypto to, I mean, it's so vast in the portfolio. The only thing we probably don't touch is the D2C or like straight consumer products or brick and mortar that are more on the SME side. But anything that can, leverage technology, B2B SaaS, et cetera, we're really excited to learn.
You're not doing hardware products in any shape or form.
No hardware, yeah. Hardware, because the fund is only $100 million, hardware takes so much capital before they start seeing return. We just felt we wouldn't be very helpful to those founders by limiting the amount we can invest in.
Okay. And obviously you've been moving very quickly. So as far as what's your investment process like? Once you start engaging with a founder and you're interested, what does that look like for you? Because it sounds like I've seen the team from the website, and I don't know how many people behind that. I mean, it's SoftBank, so I don't know how deep it goes, but obviously you're moving quickly. So how do you go about your business?
Yeah, so I'd say between first meeting to investment, probably about 2 months. So for like early stage, we're probably a little slower. At least that's what the feedback sometimes the founders give us. But SoftBank is really this Goliath in a way, right? Where there's a lot of processes, especially because we have some stuff in the public markets. There's compliance dynamics, et cetera. But essentially the way it works is we have an early stage investing team. Paul Judge and Chad Harris kind of lead that side. And you come in, you have the first conversation, we go through your deck. We then talk about it as a team and say, hey, do we want to dig in more on certain areas? And then the diligence we're really looking for is one, the data and the metrics to show traction. But additionally, it's a lot about kind of your customer calls and the feedback. I think oftentimes what founders, especially honestly diverse founders, they hesitate to talk about the vision of this really large company, but that's for SoftBank what really gets us excited. So the questions are really fundamental. It's like, how big can this company be? So you're doing a B2B platform for hair extensions. How big can this company be and what would it take? And do we think this founder has the grit, the nuance, the dynamics to really go through the ups and downs of the industry? Once they're wired, this is when it comes to my team. And we essentially think through, well, how do we now get them to the next round? Then through the Vision Fund and hopefully public. So we think partnering with SoftBank is really about having a partner that's with you through the journey, all the way to IPO and exit. And that's through value creation, and that's through ecosystem synergies, working with companies that are larger in the portfolio, as well as even within the early stage portfolio of the Opportunity Fund.
Okay. So are you structurally, are you coming in and priced rounds, safe notes? Like, do you do it one way? Do you do it every way? Do you have the SoftBank way? How do you actually invest the capital?
Yeah, pretty flexible on that. So we come in a lot of bridge rounds. We come in price rounds. Most of ours are probably safe, to be honest, because they're usually seeds or seed rounds or bridge rounds. And then, once we go to A, it's converted. So we're flexible. As long as the company is doing well, we'll figure out a way to get in with the right terms.
That's great. And are you typically taking board seats or is every company different or every situation different?
Transparently, we don't take a lot of board seats today. because we're usually at the 1 to 5% ownership going in, and it's just harder to take a board seat when you're not, 20% or 30% of the round. So we probably on board of maybe 5 of the 75 companies. So we're really flexible on that. Board seats doesn't mean that you don't get the support. It just means that, we don't have to formally meet in that setting every quarter. But honestly, we're talking to our founders like every month, every other week. So they're still getting that support, just not through a formal board. And I think founders like that flexibility.
So 1 to 5% of the company. So are you leading these rounds? Or you said you do bridge. Basically you said you do everything.
we're really flexible. Yeah, that's what I say. So I remember when we talked about the questions, I was like, we're really unique in that, our thesis is really about how do we get into the most high caliber companies, right? And I think, to be honest, this is what SoftBank is doing in general, is like, how do we get into, the best companies with the best founders in the world, and then we fight for more allocation afterwards. I do think that's a privilege that SoftBank can do because it has the brand, et cetera, to be able to navigate that. So it might be very different for a typical $25 million or $100 million fund. So, and then to answer your question, are we leading or following? We probably lead like 15 to 20% of the portfolio, but we're really excited to just partner with founders through the journey as well. So again, that goes back to our mantra, where is exceptional founders to generate outsized returns, and let's make sure we establish and earn the way to partner with them throughout the process.
For this fund, obviously it was spun up within 24 hours in 2020, George Floyd's death. Are there, obviously we've got a lot of angels on the line, and one of the things we do at Black Angels Miami, we do look to enable our members to invest in venture capital funds. We create syndicates. So do you have, $100 million is a lot of money, but pales in regards to the rest of SoftBank. LP-wise, are there individuals outside the bank that became LPs, or is this something internally as far as raising that capital?
Yeah, so Opportunity Fund and is very similar to SoftBank Vision Fund, Fund 2, and the LATAM Fund. This is all balance sheet capital. So we have no external LPs, but we do work with external folks to partner with our founders. So we're happy, and I think you and Baron had this conversation where a lot of what our founders are looking for are those really specific, nuanced skill sets, and that's what gets them excited about angel checks. And something we care about is how do we bring that to the forefront of our founders, again, to give them an advantage, so that legal experience, that medical experience, that business experience, or operational specificity can really go a long way. So what we do is we partner with a lot of folks to just introduce them to the founder, let them have the conversation, and go from there.
Yeah. We really need to wrap that up, because we have, on the line in our membership or in our extended network, a wide variety of people. Backgrounds, so yeah, we are definitely going to get more intimately involved in that. So for any founders that are on the line, just to round out that part of the conversation, what's the best way for them to apply the Opportunity Fund?
Yeah, and this is something we were really thoughtful about, because when we launch, we know that kind of what the dynamic is in venture capital is this network effect. So you only know who you know, and then you can hope that they get you an intro, otherwise you're struggling to get access to the venture capital funds. So we created this open book kind of policy. You go to the opportunityfund.com website, you put in your pitch deck, and then we'll take a look and have a call with you and go through that process. So that's the more straightforward way. The other way is obviously, if they know you guys And they send the deck through you. We're also happen to take intros through that way, through our networks. And that's why it's really important for us to be really engaged and ingrained in the community. About 15% of our portfolio is actually based in Miami. So we're really proud to be supporting Black Latinx founders here today.
That's great. That's great. And for the, I mean, obviously you've outlined basically how, members and potential investors can engage, through us, through Black Angels Miami. In the light that you're going to have great news next week, I am hoping that, fund number 2 and 3 and,
Yeah.
but I know you're not going to tell me. But, yeah, we'll keep this conversation going, because that's what I would really love. Not only, for us to facilitate and help in any way we can to get founders the opportunity for investment, but actually get the investors, engaged fully, because I think that there's so many people who are interested but haven't had the opportunity, and that's what we're here for. That's essentially the complete thesis, the genesis of Black Angels Miami. It's like, how do we get people of means who have done well the opportunity to invest and support founders? And that's what it's all about. So, going back to the very beginning when I said that, what we're trying to accomplish at a high level is very similar. We're just, working in the ecosystem in 2 different ways. How are we doing on time? 5:30. I'm afraid if I open up for questions now. Oh, by the way, for everyone with questions, I see one in Q&A, and I think chat there's a lot of things happening in chat. But if you can move your questions to Q&A, then it's going to be a whole lot easier for us to get through them all. So for you personally, is Miami going to be, is the Opportunity Fund and its future going to be Miami centric? Not going away, I mean, staying here, right?
No, absolutely. We're, Shuniata, our managing partner of all in the Miami office, has moved here literally. I moved with him like 6 months ago in August or September. I'm here, I'm looking for a house. If you guys have any tips, please send them my way. So we are investing throughout the US, but Miami is, it's really proving itself to give and produce high caliber talent, right? So we're seeing that here. We're seeing the quality of the companies, their ability to raise new rounds. Obviously, you guys know Austin Quicknode. He was our very first investment in Miami. Yeah. I was just with the Lula guys there the other day. They're great. Another one, Lumu, Black founder, doing cybersecurity, based in Miami, actually in Miramar, to my point at the beginning. So what I would love to see and understand more is Miami and the whole Broward County dynamic. And maybe that's just, me being selfish on trying to bring that part of my childhood along this way, but to see how that would work too. But I think so far, Miami's proven that, there are good companies moving, and good companies have already been established here. Is how do we bring everyone along for the journey?
Yeah. And when I think Miami, I didn't grow up here, but I think Broward, Palm Beach, even though I know there's dynamics there where, some people don't think it's all of the above, but I truly do. And I'm sure there's a very high percentage of, people on the line that are not in Miami-Dade, they're in Broward or even Palm Beach. Actually, I know there's people in both Broward and Palm Beach. So, for Black Angels Miami, our name, we may have, Genesis may be Miami, but, we absolutely believe that it's all 3 counties. It's South Florida.
I love it.
Or South Florida.
Excellent.
And so many, while Miami may be the epicenter of startups, tech companies are, in Broward, in Palm Beach. I mean, it's not all Miami. But okay. Is there, so, okay, I keep going back to, I just have this idea of the 25%. Is there a timeline for that? Or because I'm sure the fund it's a 10-year fund. Well, actually, it's off your balance sheet. So if it's all internal, what is it as far as?
Yeah, so that's an interesting question. So 10 years is usually the timeline to get kind of like the returns. We usually deploy that much earlier.
Yeah.
So we're deploying it probably by the end of the 2 years, so fairly soon. Then we'll start a new round of funding. But yeah, we expect that to be done fairly quickly, to your point. And then investing in more companies with another fund structure. So we're excited. I mean, so for me, like I said, there was Emerge and Accelerator. Now we have Fund 1. Now we're talking about Fund 2 coming up. I think this is really great momentum to show that there is money to be made. And I think that that's the right lens for this conversation to happen, right? It's less about, doing the right thing, which is great, but you're doing the right thing so you can generate outsized returns and produce generational wealth. So these companies will hopefully IPO. They'll have their own little mafias like Uber Mafia or PayPal Mafia that go on and start their own things. Then they start new companies and the ecosystem is really built around people of color. Yeah.
And doing the right thing, without compromise. It's just, undeserved founders. It's literally that simple. It's not complicated. Okay, I've got, let's move to Q&A because I know.
Excellent.
All right. So I think we've already answered the first one. Stage and point, SoftBank typically participates.
Yep. So usually at seed, well, he just asked it a few minutes ago, so maybe he missed that part. So seed and A is our sweet spot, but we'll do opportunistic Series B and C for the Opportunity Fund. Now, if you're a Series B and C company, and I'd say, the number ranges, but at least, $30 to $40 million of revenue, then we can probably get you in front of the Vision Fund for a much larger check. Minimum check size for the Vision Fund is $100 million. So those are much larger valuations. And we sometimes partner with them as they're leading because, again, if you're raising $100 million, $100 million fund can only do so much. So you have to go to the bigger fund for that.
What is the minimum check size for the Opportunity Fund?
Yeah, so minimum check size is $100,000. Our largest has been 15 million. So as you can see, it's pretty vast. And our average for seed and Series A is around a B. I'm sorry, it's around $1 million or two.
Okay. And the second question, do you invest in funds led by diverse managers? I mean, I'll let you answer. What's that?
Fund of funds.
Yeah.
We do not. So we explore this, and it might be something we explore again in the future. When we launched the fund, part of what we were thinking through is what's the best way to make impact to the overall population of founders, which is what we're good at, right? SoftBank in general doesn't do fund of fund, we're direct investors. So where we got to is what could be the most impactful for founders and those founders becoming future investors is being directly on their cap table. So we partner with a lot of diversity-led funds. We had an event just Monday in SF with Backstage Capital was there. We had folks from Cities Impact Fund, which focuses on diversity. Low Tony from Plexo Capital was there. So we really bring the ecosystem together, and at the same time, General Catalyst and GPV and GV, Google Ventures was there as well, to really focus on diverse founders. But we don't directly invest, but we'll co-invest as their companies are coming in. So please, let's talk and partner that way.
What are some of the investment things that you are most excited about?
Yeah, I mean, obviously everyone's excited about crypto. Crypto NFTs, I think that's something that's really taken over. Both us and the Vision Fund are really excited about. I'm also personally really excited about just beauty tech. As a Black woman, I know the dollars that we contribute to looking good every day. And
I have a wife and I have a sister and I have daughters, so I continuously go into shock to the price tag of everything and the effort.
that's very exciting. Obviously, future of work. I think something about something that the Great Resignation has really shown us is that people are just fed up with these traditional ecosystems, right? So, conversations I have with a lot of friends is, what's the future going to look like for our kids? Will they go to college, or will they go to boot camps and upskilling and just go ahead and be an engineer? So we're investing in a company called Career Karma that's really dedicated towards that. And on the beauty tech side, there's a company, Maven, that based out of SF, Deshaun, that we've invested in as well. Diversity platforms is always really interesting. So our very first investment was in a company led by Elise called Praxis Labs, and it's basically virtual VR training. You come in, you put on VR glasses, and instead of having this boring training, you actually proceed as if you are an Asian woman or Hispanic man going through the daily microaggressions. How much more impactful is that to creating a workplace where everyone feels at home? So yeah, I think there's just a lot happening in the forefront that we're really excited to take advantage of. And more importantly, they can be really big companies. So that's always what excites us. Excites me personally.
So as far as crypto, obviously we're in Miami. There's a lot going on. Is there anything within the basis of crypto that especially excites you?
Infrastructure play. So that's what excites us most about QuickNode. Of course, Austin and team and Alex and Dimitri, they're all amazing. But I think the best part, because we don't really know where this is going to go, right? There's the NFT side. There's obviously DAOs, et cetera. It's really great to be the next Amazon or AWS or Azure for this Web3 environment. So yeah, we're really excited about the infrastructure play, me personally, most, because I think that that's the best way to, see my investment come to fruition. If all of this crashes, I'm still gonna make money because everyone's buying QuickNode.
Do you invest outside the US?
We do not invest inside the US today. I do hope for that to change. Well, I'll answer that two ways. Emerge, the accelerator I created, actually has gone to Europe. So they had a European cohort, London-based. I think they're going to new regions as well, which is exciting. I've now focused solely on the Opportunity Fund. I am hoping, because I've seen a trend, I actually went to Nigeria last year and met amazing founders, went to Kenya as well. And what we're finding is a lot of founders are in Africa are here part-time. They weren't really able to be so because of the pandemic. But they are pitching to white investors in the US all the time. So in my opinion, they technically do fall under our thesis, right? Because we want to help that Black or Hispanic or Native American founder that is pitching and being uncomfortable being the only one in the room, kind of navigate this. So one, the valuations are much smaller in Africa, but the traction is much farther along. So there's this really great arbitrage opportunity for us. So that's one reason why. But two, the need is there. You'll be surprised that I think something like 50 to 60% of companies that have raised in Africa are actually white founders. So
okay, no, I'm surprised.
The mantra is continue.
I didn't realize it. I didn't realize that at all.
Yeah, I was shocked. So I think there's an opportunity for us to continue this amazing mission to generate outsized return for people of color, even abroad.
So let's just stand on that for a moment. That 50, 60% being white, are they based, did they grow up there or they saw an opportunity and went there to start their business? Do you
I'd say
know?
a majority of them have come into Africa. It's quite common. Yeah, and there's some people who've grown up there. I haven't met a lot of founders that were white that grew up there. I think a lot of them came from Europe. A lot of Asian founders too go up there. Even a SoftBank company called Opia Pay. Asian founders. It's a much larger company on SoftBank Ventures Asia. But Asian founder did something great in China and then went to Africa to replicate it. That doesn't mean it's not going to make a lot of money, but it'd be great if we can also invest in more founders in that region.
Do you invest in companies that are based here in the US, but actually do work in other regions, Africa, Latin America?
Yeah. So that does fall into our thesis. Good question. So to clarify, if you are in Africa or in another region and you do business in the US, you qualify because you're talking to American investors. If you are based in America, but your business is actually, your operations are abroad in Asia or in Africa, and you are a Black or Latinx founder, you would also qualify. But, and obviously if you're in the US doing business in the US, you qualify. But if you're in Africa doing business in Africa, you would not qualify. Or if you're in Jamaica doing business in Jamaica, you would not qualify.
Gotcha. That's a good clarification there, because yeah, there's a lot of companies cross-border. Okay, well, what is SoftBank's thesis, diligence process, timeline? Can you expand on what the quality of the company means to SoftBank? I think we've covered all of that, except the quality of the company means to SoftBank. Well, I'll take a step back. What is more important, or are they equally important? The founder or the, do you run up and meet with a company, like the company, not so sure about the founder, or love the founder, not so sure, not 100% sure on the company? Do you bet on the founder, or sometimes you bet regardless of the founder?
No, that's a really good question. I'd say that answer changes as the company matures. So when you are a pre-seed company, literally they're only betting on you. We're like, can Kevin like freaking make this work? Can he figure it out, right? As you go from like seed to Series A, you have to show some traction and some numbers, but there's not a lot to diligence as far as like data. So again, it's now the founder and the vision of the company is what I'd say is what we're really looking for. Now, what ends up happening, and I spend a lot of my time coaching founders about this, is when you go from Series A to Series B, it's like night and day. You're now talking to growth equity investors. And that's all about data, right? And that's LTV to CAC ratio. That's your retention numbers. That's customer retention, talking to, looking at the projections, looking at your forecast. And now, because there's 3 to 4 years of data, right? Because at Series B, you're probably like 3-4 years in. Now we're looking at what did he say his projection would be 2 years ago and where did he land? So can we believe him? So in addition to, you know, betting on Kevin, betting on the fact that this could be a really great company, I think there's a lot more data. I think governance is way more important as well, right? So when you sense sloppy data rooms, that's a big red flag, because now it's a $15-20 million company. You can't, you know, kind of be a little as relaxed as you were in it. So I find that a lot of founders in our portfolio, outside of our portfolio, when we're diligencing, that switch always is shocking to them. So in the beginning, it's obviously about you, your mission. Do we believe like you can figure it out? As you continue to raise, traction becomes more important. And then as you switch over to B+, it's all about the data and the numbers. That's my opinion. I'm not speaking on behalf of SoftBank. That's just Dami's opinion.
In my opinion, you know, that founder at the beginning with the vision and the grit may not be the same person you want running a 10, 20, 30, 40, $50 million company. So when you, I'm sure you come up to that, is it then a matter of helping them round out the team or getting the expertise around them to support them, or, you know, what happens there? Because I've seen founders unfortunately leave or, that's worst case scenario.
Yeah.
But maybe they're not the CEO anymore. But they're still happy because they're doing what's in their wheelhouse, what they love doing, but they've got the right people around them. Is that, what's your experience there?
Yeah, and I'm speaking on behalf of Dami, not
Right.
SoftBank or Opportunity Fund. My personal opinion is that I'd always prefer to keep the founder there in some realm.
Mm-hmm.
I've seen a trend, I'm starting to see this again. This is just anecdotal, where a lot of founders are stepping down again, and I'd rather that they were able to somehow figure it out and get the right team. So the other component when it's Series B plus, and I have a colleague, Goisha, who does this for us all day, every day, that can memorize this for you, is that team. And it's mostly your ability to attract high caliber individuals. Like, that's extremely critical, right? Because once you made a great point, once you get to a certain threshold, there's just things you just won't know, right? And it's great that you can poach someone from Google who's leading an engineering team, or from Facebook. That's when it's really critical to have those direct hires, or a company that's, raised the Series C, or sorry, CFO, excuse me, that's raised the Series C before. So I think that that's extremely important. So team actually becomes so that's one of the Series B things as well that matter, still important in A. But as we understand, like, you and your friends started this thing, you guys are gritty, you're hungry, but at a certain point, competence really matters. I think that's the A to B threshold that really shocks a lot of folks.
All right. Let's go down this line. Okay. So what typically makes the due diligence process move faster for your team?
Oh, that's a really good question. Sharing data, I think, is number one. This is, again, just my opinion. I think oftentimes founders forget that, especially as a generalist fund. So I talked about, we don't have like a thesis on only crypto where we do that all day, every day, or B2B SaaS where we do that all day. We're looking at different things. So on the same day, and I'm more on the post-investment side, but I'm talking to an insurance tech company, then talking to a cybersecurity company, right? So same when we're having those first conversations, I think the best founders kind of break it down as if you're like kind of like a 5-year-old, and really talk about the fundamentals of the company. And that helps people wrap their head around it, what the opportunity is. Because then what ends up happening is, as a generalist fund, you're doing a lot of research on just like, what is this? Like, what is this industry? You're just getting up to speed. We do have some tailwinds on our side. For example, fintech and cybersecurity. Paul Judge, who's on our investment committee and kind of leads the early stage work, he literally owns a cybersecurity company. So he knows everything in that realm. There's very little you can get past him. On the fintech side, we've done a lot of, probably have 20 to 30% of the portfolio that's fintech. So now we have some tailwinds on that. But again, if you're talking to brand new investors who haven't seen that realm before, I think kind of breaking it down really helps the diligence process goes quickly. Then of course the data, and sending that as quickly as possible, getting them into the data room, doing those customer intros fairly quickly, etc. So I say that streamlines it, but we are slower than most. So prepare yourself. I just always want to be, conscious of that.
Yeah. So I got a question here. It's a question to me, but I want to answer this very quickly. So Black Angels Miami, we're a group of investors, but Black Angels Miami itself, we're a nonprofit, so we do not actually make investments. But as far as the companies we put in front of the investors, and really that public mechanism, or more public mechanism, is pitch night, is pre-seed all the way through to Series A, and lesser, vast majority will be seed. Our thesis is really just to support, Black founders as best we can, but we're not exclusive. So we'll put good the next Google says, hey, Black Angels Miami, are you interested in investing? I'm not going to put that. I'm not going to not put it in front of members. I'm like, absolutely. I want them to make great investments.
Yeah.
I want them to make lots of money so they can invest in the next company. I want it all to grow. Diligence process and timeline. There's multiple tracks, but for pitch night, it goes through website or directly to me. But honestly, if you're sending emails to me, you could get lost. So if it goes for the website, it goes through a process. So sending me a DM, great, but not the best. So go through our website, and you fall through our process through to pitch night. But to learn more about Black Angels Miami, you can email me, kevin@blackangels.miami, and I'll be happy to talk to that all day long. Are there any opportunities for companies outside the Miami area in the rest of Florida from the Angels? Am I getting more popular now? That's another question for me. We in Black Angels Miami may be based in Miami, but our membership is nationwide, and the companies we look at are nationwide. So absolutely. What is the average revenue of the target portfolio companies? So is there a minimum, when you say traction, is there a minimum amount of revenue?
Is that for me, or
that's for you? We're switched all the way over to you.
No worries, no worries.
I think there was just a moment there when, I wanted to ask you some questions.
No worries. And I do want to get to, I think, Anthony's question on what we do beyond capital, because that's literally like 80% of my job. What is the minimum traction? That is an interesting question. I'd say in general, for a Series A, like 1 million ARR, but it really depends on the industry and the dynamics. We invested in some companies like last year that were into crypto, blockchain, NFTs that were obviously pre-revenue because there was nothing. And they're blown all the way up. So I think what founders need to work on is displaying traction, right? And obviously traction can be revenue. Part of it is like, hey, we have a wait list of 500 people that really want to get into this app. So that means there's something there. There's something that people really desire. It could be that we've done all this research and these dynamics, and that's showcasing it. So I think it really depends on your industry. But obviously, I think the best thing you can do is talk to other founders, right? For an investor you want to make it, get an intro to really understand the dynamic. But for an A, I think it's 1 million. For seed, 1 million ARR. Seed, I'd say 100K to 150K ARR. So you're just like at $10,000, $15,000 a month in revenue and kind of churning there. And that's probably where it get our attention. But again, we're pretty open and flexible. And there's a lot of companies that are outside both of those mediums.
So let's talk about what you spend most of your time doing.
Absolutely.
5 minutes left.
Yeah, so we really believe, especially on the Opportunity Fund, that capital is a commodity, right? So while we're honored for, to be on your cap table, we really believe that partnership and having a team there to see you along the way is what will help you generate outsized returns and return our fund. And hopefully 10X, I have a child I need to put through college, so this has to work. And our mantra through that is something we've coined VC squared. So what that means is validation, connections, and community. So by validation, we know being part of the SoftBank ecosystem means something. So we work our best with our head of comms on this call, actually, to amplify that and to get you the best hires and customers by saying SoftBank backed your company. In addition, we have a hiring platform to help you get the best hires that streams through our website. On the connections piece, I think Anthony hit it on the head. There's customer intros within the portfolio. But what we find is founders also really just want mentoring, right? So what does it look like to talk to someone who was early at Uber and now they're able to really talk about how they built that to a large company, or GoPuff or DoorDash, and not only micro-mobility companies, but other companies within the portfolio. So that's one aspect. Also part of connections is our WeWork. So you're gonna see my daughter now come through.
It's your turn.
Through those connections, you get a WeWork passes to be able to amplify through that. And then the last one is this community, which we think is special. So through convening, okay, try to go to daddy. He's like, no. Through convening and engaging, we bring our founders together, as well as an advisory council that helps our founders grow and scale. But yeah, that's it in a nutshell. A little quicker than I need to be, but yes.
Okay. Is there anything at the Opportunity Fund we've not touched on, or anything you believe everyone should be aware of?
I think we covered it a lot. I think this was super robust.
Yeah. All right. Any of these last questions? We got 3 minutes, so you got time for probably one or two more questions.
Does SoftBank donate to nonprofit tech organizations? We do not, unfortunately. At least not in invest through that. How much time do you spend daily looking for new deals? Are most deals inbound? That's a good question. A lot of them are inbound, I'd say. I'd say like probably 50 inbound through the website or through, someone like Kevin or Baron or Kimberly, intro me to a founder. Actually, Kimberly introed me to someone that we are going to invest in from the Goldman Sachs program. So that's an example, right, of an inbound. And then we're doing things like going to South by Southwest to go and source as well. It was harder, to be honest, to source actively when you were all at home. What digital platforms do you use to manage your deal flow? Affinity. Have there been any challenges finding Black founders that are ready to take on capital? Sir, where do you find the most challenge? One thing that we've been impressed in, there's no pipeline issue, like at all. Like I don't think
because
we get a lot of inbounds, good quality companies that are all from different industries. So we've not, I think that's something that shocked all of SoftBank. In the accelerator I led, I think we had 300 applications and applications were only up for a week. We thought that was a fluke. And then when we launched the fund, we had so much inbound as well.
So why do you think that statement keeps being said? I hear it like every other day, or we can't find, like, why?
They don't know anyone in their networks. They don't know Black people. That's the truth. They just don't have anyone in their net, which is something I think is, what Black Angels Miami, what Opportunity Fund, what Goldman, all these other organizations can really do is start bridging that. Because once you know someone, you know someone who can send you really great deal flow. But I think that's why they're perceived by that. I think unfortunately we're just still super segregated in our personal networks in the U.S.
With that, 6 o'clock on the dot.
Yeah.
I mean, I really, really, really appreciate you making time to talk.
No worries. I hope this was helpful. It was a great conversation.
Thank you. Your input, your insight has been really, really great. And thank you all for tuning in. We are going to have an in-person event shortly, so stay tuned for that. If you're interested in Black Angels Miami, and if you're interested in an intro to the Opportunity Fund, you can reach out to, my personal email is kevin@blackangels.miami. And don't be shy following up on that email. It's a lot of emails, but I will get to you. And you can contact us through our website too, at blackangels.miami, and we're on Twitter at blackangelsmia. So, as Dami said, it's relationships and intros, and we'll do our best, and we'll try and keep those communication lines clear. So Dami, again, thank you so much. We're gonna meet in person soon, right?
Yes, absolutely. Can't wait.
All right. Take care, everyone. Have a good evening. Thank you.
Good evening.